In this video, traders, I want to discuss with you what unusual trading advice would I give to my 21-year-old self as a trader. Stay tuned. Hey guys, warm welcome to you. All right, so what advice, and I put trading advice because there'll be other advice, but this is just trading specific advice, would I give to myself when I first started trading at 21 years old? Okay, so this is unusual, different advice, but it's just based on what I know from my journey and what I know really would have made a lot of difference and accelerated the learning curve and made a lot of kind of a positive impact on my trading earlier on, rather than having to kind of dig through the quad and the mud and the quagmire and the mud and get through and go, oh, finally got there. There were going to be shortcuts, easy ways of doing it. So what would I say? First thing is find a unique edge. You know, I started out like everybody, guys. I was there. I was learning the standard stuff, standard indicators, standard chart patterns, blah, 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 all this, and trying to make them work. Just clueless, just without any strategy, just ripping through, losing trade after losing trade after losing trade after losing trade. No idea whatsoever. You know, the time when it started working for me was when I just started to develop a unique edge in the market. And it's just a very, very specific, unique edge. You know, one of those edges was trading mining shares, and it was just to trade these laggard mining shares on the London Stock Exchange. Like, hey, these are the leaders, these are laggards, trade that. Another one was spotting these very, very basic algorithms on the level 2 screen, just doing that, spotting that, trading off that. So these are edges that I developed myself. These are edges that, you know, reasonably unique. I'm sure there's a lot of people doing as well. But the point is, it wasn't traditional textbook stuff. Yes, there was sort of theory of, you know, some of the price action structure and things like that were playing a part in it. But ultimately, you know, there was an additional edge from me observing the markets. You know, that's the key. You know, you can have a structure to trade, an idea and boundaries and all this kind of stuff. But, you know, the real emphasis comes from your observation of the markets and the confidence to pull the trigger and the confidence to trade it with size and the confidence to cut it known as a loser and all that kind of stuff. This is not a video on confidence, but that's the kind of thing I would say. Find a unique edge. And I know you're watching this going, Mark, that's hard. Where is it? What is it? And I can't answer that. That's the challenge. You know, I can't say to you, well, your unique edge is this, John, and Jane, your unique edge is this. Now, obviously, if we had a one-to-one chat, I could say, right, let me just see what you're doing, how you're trading, and perhaps extract and guide you and think, kind of observe and go, you know what, I think you've got a bit of a good feel for that. Why don't you explore that a little bit more? Why don't you put some screen time into that area? Why don't you try working on that more? Double down on this. And then it starts to extract something you're good at. And then when you're good at something, that becomes your unique edge. Hey, I'm very, very good. Example, I'm very, very good at spotting short-term flushes on a 15-minute chart, for example. Okay, well, why? Well, because I look at specific areas, I look at a specific time of day, I'm very good at recognizing when we kind of had that stall in supply demand, we create the liquidity vacuum. I'm good at spotting those. Great. Okay, do better at that. Odd example, I know, but that's kind of your unique edge. You've got to find it, it's screen time, it will be there. And the thing I'd say is make sure you understand all the risk. I've shared with you guys a story where I just got brutalized one day, got absolutely hammered, and I survived it. You know, it was ridiculous swings up and down. I'd scaled up my size. I hadn't realized what I was really letting myself in for. Market was swinging up massively. News came out, came down, came back up, and I couldn't get out of position. It was just a horrible situation. But there's that. But there's also the added thing of understanding all the risks, because the risk doesn't really come from that sort of one-off situation. I've not been in those very, very rarely, and that's the one that springs to mind. But it's in your mind, it's the way that you trade. The hidden risk isn't really in the deal you're taking and the stop and the size, it's how you can behave. The hidden risk is you overriding the rules, is you trading on tilt, is you doing all that stuff. That's the hidden risk. And if I'd have appreciated that early on, then I would have put in place things sooner to stop me trading on tilt, stop me trading too much size, stop me over trading, all that stuff that I had to kind of work my way through to get to this point now. But if I'd have recognized that was an issue early on and recognized there was the risk, actually, it wasn't you making a better trade, it wasn't you structuring the stock correctly, it wasn't you running the trades, it was you overruling stuff and you going off piste, that needs dealing with quickly. And that's always what I advise traders to do anyway when they first start out. Deal with that, sort out your risk management, then look at the nuances of actually interacting and transacting. Okay, the third thing is when you get consistent, press hard. When you find, this is again advice to me, when you find consistency and stuff's working and you've got another month, another green month, another green month, another green month, and you're like, okay, this is working, this is finally working. Press hard would have been my advice. Now, it's not for everybody, but that will be my advice. Like, press until it's uncomfortable, because you are in tune, you've got confidence, you've got the wind behind you, you're in the right market conditions, obviously, because you're performing, you can see all the evidence there, you've got a very limited drawdown, good upside, good consistency. Now is the time to press the throttle down and put some of those gains you've made to use in risk capital. Yes, of course, you can stuff it up, you could give it back, conditions could change, that's the game you play. But when you're early on in your career and you haven't really got that much to lose, so to speak, it's the time to be able to boost that account. Get to your first $250,000, get to whatever number you need to get to, so you can just go, all right, okay, things can relax a little bit. It was a small account, now it's a reasonable account. I can manage this, this is good, okay. You know, that would have been something that would be prudent to do, is when you get that consistency, start to dial things up, but only after you've put kind of multiple green months in. You're like, okay, I've got this. I feel like I've got this now. I'm in tune with what's going on. Number 4, always be looking for new strategies. So kind of goes hand in hand with this, really, because you think when you first get a good, consistent quarters, months, years even, you go, you know what? Yeah, okay. But then the market may well change condition. Now, it doesn't mean necessarily that it completely everything goes to pot and you start losing badly, but the performance degrades. Like, hang on a second, you know, I'm doing it because the conditions change. So one thing I'd say to myself is always, you obviously be focused exclusively on what you're doing and make it work, and double down on that specificity of what you're trading and press harder, but also allocate time to look for new strategies, look for new things. You tend to be so blinking and go, this is it, this is working, I've cracked it, the code's here, push, 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 and you don't realize that actually that'll change. You know, the road will change, or it will disappear completely, or it will just adapt. You need to be looking for new strategies, new nuances, new things, noting them down, maybe kind of formulating a plan around them, so that when conditions do change, you're not like, oh, what's happened? All of a sudden that was working very well and now it's not, what do I do? And that little tiny bit of fear in you of, maybe that was it. Was that it? Was all I was destined to be? Was a trader who had a couple of good years? And you kind of look around and go, oh, you know, you're ahead of the game then. Okay, I was expecting you. Okay, I was expecting you. As it happens, I have other strategies here. I'm going to start to employ them, bring those up to speed, get those that. You feel much more in control. You're not a one-trick pony, so to speak. So that would be my fourth piece of advice. Always be looking for new strategies. Number 5, don't operate like a lone wolf. I think we're all a bit like this, guys, if we admit it. We're like, okay, we like the fact that it's us alone, nobody else. You're in your office, the doors are shut, you've got your screens there, you, the screens, the market, you against the market, you thinking, you planning, you strategizing. End of the day, yeah, end of the day, you've got a good week, good month, whatever it is. It's you, and you're also getting that instant feedback, and we like those traders. But I really think that, you know, that fine, we're always going to be, we're running our own account, that is always going to be how it works. So our decisions are going to have an impact on our P&L. That's as simple as that. And that's one of the positive things about trading, right? Yes, it's challenging and there's lots of things to go with it, but that's one of the good things, is that you are getting that instant feedback, and it's just you. You know, it's just you. There's nothing else. You haven't got to rely on clients, you haven't got to rely on your boss, you haven't got to rely on anything else but you and the market, and that's it. And there's a certain purity and comfort with that. But something to be said is, we can fall into the trap of just operating like this lone wolf, and I think that getting a support network and a structure, or a trading buddy, or just something where you can go, hey, you know, why do I feel like this in a trade? Like, yeah, I feel like that too. Yeah, I do too. It's normal. How did you get around it? Well, I got around that. It's just something that makes you go, hey, it's not just me who's making these mistakes and I feel like I'm an idiot for making these mistakes. This is normal, and this is how people have got over it. I'd be much more inclined to do that. And okay, back then there wasn't really that so much around. The bulletin board stuff was completely different, very toxic, as a lot of them are. Not quite the same thing, or discussing various trades, rather than the experience of being a trader, the collective experience of trading, the highs, the lows, the emotions, all this stuff. I'd definitely be more inclined to seek that. And the same thing with number 6, guys. Find someone to make you accountable. So even if you didn't kind of do that and find a community that was working for you, and surrounding yourself with those kind of people who are on a similar journey to you, it would be okay. get someone accountable, your wife, your husband, whatever it may be, a friend, and say, hey, these are my rules, this is one I'll stick to, can you hold me accountable to it? This is my work I want to do, this is the hours I'm going to put into it, this is the screening I want to do, I'm going to take trades. Just so that if you're struggling with the rule breaking, that someone's there to say, hey, did you stick to that? Did you stick to that? Because sometimes when you think about that, and you think, hey, you know what, they're going to say, hey, I'm going to stick to my plan for this week, and next week you come on, you say, hey, how you getting on? You stick to your plan? Yes, I did. Whereas if you just say it to yourself, you go, oh, well, isn't that important? We tend to break the things that we say to ourselves and not to others. Anyway, so that would be my kind of final thing, is accountable, so that, especially when you're 21 years old, you kind of think, well, I'll do what I want, I'm a trader now, I'm making money, yeah, I'll do what I want, all this kind of stuff. And in reality, to get to the next level, to get to a proper level, they've still got a lot of work to do. But those are 6 things, guys. Find a unique edge, making sure I understand all the risk, pressing hard, really consistency, always be looking for new strategies and approaches to the market and methods. Don't operate like a lone wolf, and finding someone to make you accountable, or probably hold you accountable is more correct. Anyway, thank you guys, take care, see you next one, bye bye.